Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for visiting us today. I'm streaming live from Costa Rica. Hope you're all having a good day. And please be aware that internet can come and go depending on if the monkeys swing on the vines or the internet cable. And of course, power is always suggested but not required here in Costa Rica. So be aware if I drop out. Eventually, I'll be back in a few minutes after everything recycles. Thanks for your indulgence with that. Can I please get a screen and audio check in YouTube and the Bookmap Discord TraderLab community? Thanks, Marty. How we doing in YouTube today? Hope you guys are doing all right. Well, good morning. All right, great. Well, let's get going today. This stream's about integrating Bookmap order flow tools with auction market theory using the volume profiles of chassis in the intraday developing time frame. Volume profile is not an indicator. It's really a way to organize information. It is really about market mechanics. How does the market work? Why does it do what it does? How at times you can get in alignment with it. And of course, you develop and vet structured trades that you basically pre-engineer so that when the condition aligns, you then have an opportunity to engage with the market. And the thing about trading to understand is it's really about statistical edge, not outcome of one trade. It's not really what the business is. The business is random in the sense of the outcome of any interaction because they all look the same. Right? If everything looks the same, but the outcome is random, how do you solve for that? Well, it's not about being right. It's not about being able to predict which iteration or individual event works or doesn't work or gives you yield. And it's not about being right. We got to take this notion of being right and predicting and please throw it away. That's not going to work for you in this business. You can't know those answers. You need to be asking the right questions. And then you also need to know where your trade shows up and what you're going to do when it does show up. Not what it or the other participants will do, what you will do. That is the business of trading. And I know we're all looking to avoid that unknown because we really want to know. Well, if you can't know, you can't get it. So if you're still seeking prediction, being right, knowing, getting validation for your brilliance. I understand we all want to be brilliant. We all want to be validated. We all have this thing about self-worth and yeah, I was right. I get it. You get it. But it's not our business. So we're still going to be emotionally attracted to those things. And that's why marketing works so well. I always, in fact, I've just been reacting personally really strongly to these things we always see out in the internet world. Like how some AI, $1,000 in AI made 50,000, and it's turning Wall Street on its head. The only thing it's turning on its head is you. Because anybody who has half a brain knows that's nonsense. But marketing is marketing. So marketing takes place in all dimensions. And the fact that we are drawn to marketing is because we are wired to respond, and marketers understand how to push our buttons. So it's always the one thing you need. How I made $1 bazillion in 4 minutes, and all you got to do is take this one trade every morning, and you're going to live the life of luxury. Haven't you all seen that? It actually kind of enrages me because so many traders bite on that and spend their hard-earned dollars and their time, and none of us have unlimited time or unlimited resources. So I appreciate you visiting TraderLab, and I hope you're going to, TraderLab may not be the solution for you because you're actually going to have to change what you believe this business is, and you're actually going to have to roll your sleeves up and do some work. And the other part of doing the work is finding out who you really are. What drives you to make choices and decisions? Now, we're all the same in the elements of our primal wiring. So we all have the same needs, okay? But those needs don't align with this business. So while you're attempting to learn the business of trading, you're also going to have to focus on learning about yourself. What causes you to make choices? What causes you to do things that are not in your personal best interest here in this business? Those are the questions, and you can get those answers in TraderLab if you come and do the work. And I'm not going to say it's the ultimate solution. There is no such thing. I am going to say that the TraderLab is a community of like-minded traders who come together to leverage their collective experience. We all walk in the same shoes. We've all done the same thing. I've been doing this going on 47 years. Me, same as you. You know, anybody who is sustainable in this business has done the same things as you. At some point, you need to diverge from other developing retail traders where there's over a 90% failure rate. How can we diverge from that magnet that draws us back in to behave like everybody else? It's the desire to be different and to recognize you must change. And you can't change the business to fit you. You have to change you to fit the business. And this is what TraderLab is and why it was created. And you're all invited, and there's no cost for it. General disclosure. All Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is for educational purposes only. We always hope for the best, but we have to be prepared for everything that the market presents because we have no control over the market. We only have control over ourselves, hopefully. And what is that statement, you're asking? What do you mean we have control? You know what you have control? The same thing as the casinos do. You control everything until you push the button, click the mouse. But if you can control the inputs, but you cannot control the output, but if the inputs give you a statistical edge, doesn't that mean over a random distribution of outcomes that you will net positive dollars because of a positive expectancy? Gaming, or the way casinos operate, is the business we're in. They only play games that have an edge. It is very simple. Now, what's not simple for emotional beings who are attached to outcomes, approval, fear of loss, FOMO, all that, that's our problem, is the random nature of this environment where we can't predict anything. And it's not about being right. So how can you be right in an environment where you have no control? The control is with you up to the point you push the button. You control everything. The casinos control everything up until they deal the cards. Then it's the edge, not the outcome of the hand. Is this making some sense? This is the business. You can try to make it something different, but that is the business. You want to be in this business, you have to adjust yourself to the business, not try to bend the business to you. I have to keep saying this to you because we're running out of time. This Black Friday deal, go to bookmap.com. You want to check them out. You could even get your little toe in the water with the Global Plus on a monthly. Plus add-ons, if you have Bookmap now and you want to throw some add-ons in there, there's a couple I can recommend to you, but go to and there's a smorgasbord. You guys remember smorgasbord? Of opportunity and add-ons that you can try out if you want to. I can give you some suggestions, but pick a few of them, see what they can do for you. Come to TraderLab, ask some questions in there, what others might recommend. You know, it's all up to you, of course. Everybody with me so far? So, Black Friday deal. Don't miss out. Go to bookmap.com if you're inclined. Don't miss it. You don't need to take it, but I'll tell you, I got Bookmap, I think it was 2015. The only thing that I had was to get my checkbook out. So you guys have an advantage. Now, let's talk about the business of trading. What is this thing? How does it work? Very simple. Guys, trading is not complicated. Let's just forget about all this complexity. We think the secret lies in the complexity. I'm talking about me because I'm the same as you. That's the only thing is 47 years of this. You probably not so much. We're all the same. We embark on a journey. It was different for me. The only difference between me and you is more time. But also, there was no information when I started. There were no off-floor traders. I never met one. Everybody was down on the floor. All my friends were floor traders. This is 1980. We didn't have PCs. We didn't have an internet. How do you like that? I did have a ruler, and I did have a pencil for drawing my trend lines. Okay? I shared an office with George Lane. He created stochastics. So I got exposed to technical analysis very early on. Wells Wilder published his book on technical analysis 1978. So I started 1980. This was all new stuff. George Lane created stochastics. I shared an office with him. I thought that was the holy grail. And then it was embark on the journey of making it all fit together, work together, multiple time frames, computer programming, system development, eventually becoming a fund manager, money manager, and all this stuff, running a trade desk. The problem was always the same, and that is curve fitting, tweaking, tuning, squeezing risk out, because I thought that was based on a psychological need. But what I didn't understand is, what is the purpose of the market and how does it work? Here's how it works. It's shopping. Why do we even have a market? We're trying to figure out value. What's too high? What's too low? What's fair? Not complicated, is it? You go to the store, you're doing the same thing. If it's too high, you don't buy it. If it's on sale, you throw 5 in the cart. And if it's a fair price, you buy your mustard, you go home. Right? Too high, too low, retail. How do we see that in the market, though? The volume profile. If the price is too high, less buyers. Volume dries up. That makes sense. But how about if it's on sale? Do we get more volume if it's on sale? No, we get less. Why? It doesn't stay on sale. You ever go to the store and it's on sale, what, for a day? Do you think there's a ton of volume down there? Or is there more volume at the fair price or retail price? More volume at the fair price because everybody's willing to do business. If it's on sale, they don't keep it there. Less volume. If the price is too high, less volume. It creates what? Rotations. Now let's take that and extrapolate that concept of shopping, which you already know how to do, and put it into a time frame. A time frame is just a rotation. Short-term traders like us, day traders, might trade a short time frame. In that rotation is the same process. So this happens in a vertical integration of time. That's why we talk about multiple time frames. So the trend what is the trend right now? Is it up or down? Well, today the market's going up, but what is the trend? Are we in a bull market? Are we now in a bear market? Does anybody know? And everybody's going to have an opinion. Well, what market are we on? What time frame do we trade? Well, as day traders, we're not trading the higher time frame. We're trading inside it. Now, here's the thing that might be the hardest part. The context. What's context? What is this term? Context is the condition of the market in the time frame you trade. And since we're in a vertical integration of time, and I don't think of the clock, I have a little different viewpoint, but it's not really material. Think of Matryoshka dolls, Russian dolls. You know, they're inside each other. They're all the same, and they're stacked, right, on top of each other. When you're thinking time frame, you're thinking multiple time frames or vertical integration of time. It is a time frame, but what happens if we're in a bull market, but we go down like yesterday? Well, does that mean you buy and it's going down, down, down? Or in your time frame, is it a short, while in a higher time frame, it could end up setting up a long? What is it? Very conflicted, very confusing. You have to be able to differentiate based on your time frame. Now, what about Bookmap? Where does all this come in? I call it the tip of the spear. When I'm engaging in the market, I'm now no longer involved in time. I'm involved in order flow and participant behavior. I call it the tip of the spear because this is where I execute. So I'm not waiting on the clock for execution. I'm using order flow. Think of it like a scalpel. I'm going down and I'm no longer in time frame. I'm in behavior, participant behavior. That's what Bookmap does. And that gives me edge because now I've moved to another level. I'm looking at icebergs. I'm looking at stops that come out, how and who's absorbing the other side. I'm looking at passive behavior and aggressive behavior. I'm looking at the delta, and I'm looking at resting liquidity and do they pull, do they add? All that nuance is on another level, and it is a more sophisticated level. But because I'm now at a level that most other traders don't operate at, I now can extract edge. Does that make sense? So this is the mechanics of the market. Now, how are some examples of this? Well, every day in the stream, you can see what I do in real time, and I like to start as it unfolds so you can see how pieces fit together. Also, there's 60 PDFs of structured trades, and these are actual live trades, you know, and a lot of them are just screenshots. I put these together 2020. It was because traders were asking me, what are you doing? So I said, well, I'll throw you a few things. And some of this was research I did with Bookmap developers. And, you know, with research, and I've done a lot of research over the years, so I'm kind of used to it. I'm a very curious person. Built trading systems, so research is not foreign to me. but I've spent years doing it. So every time I see something, I think about it and I go, well, what can I do? Can I do something with this? Can I make it better? So some of these things you're going to see I don't use. There were elements of research that I work with Bookmap developers on. And now here's order flow phenomenon. Here's an idea. Look at this. This is called the bracketing algo. And this is a live trade I was on. And I was short. And I'm looking at this. I think, oh, but wait, what's it? Yeah, I was short. And I'm in the market. And this bracketing algo is here. So what happens here? Look what happens here. The liquidity presses up and the bracketing algo pulls right here. Notice this. This is the same participant. Right there, exit. What happened? Explosion. This is how order flow might work for you. Now, like everything, it's not mechanical. It's, what's happening. Anyway, these are available, and they're in the TraderLab. And if you're visiting in YouTube, there's 60 PDFs of these you can download. Now, caution, there's no plug and play. If it was, we'd all have plugged, we'd all played, and we'd have ATMs in the basement. So we got to get over it, right? Doesn't exist. Wish it did. You too, right? We're all in on that idea. Now, let's come back. Got to make an adjustment here. I have audio going off in my headphones here, which is not good. One moment. This is Investor RT. This is my higher time frame software. Don't let this make you go running with your hair on fire. Basically, what I'm doing is, now these are called it's called micro composites. It's a composite. And these are RTH candles. So, up, down, But what's happening in here? When I talk about shopping, remember a vertical integration at time. This is shopping. So if this is too high, I don't know it at the time. Remember, benefit of hindsight. And I find too low, swing low. Now, there was a gap here. Okay, so that break away. Too low, too high. And this now is the highest volume in this distribution of volume. So remember, I'm not paying that. Yeah, but it's on sale. Retail. I'm in an intermediate time frame, and the market breaks away from it. Just giving you an example. I come back, and what's too high? Here. If it's too high, I'm not paying that. What does the market do? I'm out of here. Then we come down, and then what? Come back. Where do we return? Here. Right there. And what else do we know? There's stops up here, and this price up here was too high. Now I'm going down into the daily time frame. So intermediate, individual, these bright yellow lines are the high volume. Remember the mustard. Mustard, retail price. Everybody likes mustard. But we come up, and what happens if this price is too high? I'm not paying that. You got to be kidding. Let's get in the car, and let's leave the store. Now let's go to another location. Swing low, and this swing high. And in here, where's my retail price? Here, high volume. And what's yesterday's low? High volume. Now, do we know? Unfortunately, no. What we know is if you're in TraderLab, you already know the possibilities. Here's the other part. Let's go back a little further. In this consolidation, we had a little gap. So there's going to be stops here. Okay? What else do we know? The market went up, up, up. If you follow my streams, you know we were talking about, this is called fuel. Once we get the shorts squeezed out from here, if we run out of buyers, what's under the market? Sellers. Once, and we don't know where this is, part of the thrill, but this day here, the mustard was too high. I'm not paying that. That sets up a short. Now, to where? Nobody knows. But what do we know? Sellers are built in here, right? So if that's too high, we're out of here into the fuel, sell stops. Then what? Short squeeze. Now this, don't know. There's other levels that we work with. Lower. Now we opened day before yesterday. This is the retail price for your mustard again. You got to be kidding. I can get mustard for less. Next target was here. There it is. No precision. Horseshoes and hand grenades. Then what? Yesterday. Now, yesterday morning, and you can follow yesterday's stream, initially I was looking for it to squeeze and then either go down or, whatever it does, it does. Well, it didn't. We started out on the long side yesterday, turned around, got short. And then once we take out the stops under here, where's the next target? It's there. Yesterday's low. And now let's go a little further, then we're going to get into today. And if you have questions, please post them. The reason I'm sharing this with you is so you understand that before today even opens, I have to know the lay of the land. And the other thing I need to know is something very simple, and that is the market goes up to go down. It goes down to go up. Check a level. It goes up to go down somewhere, goes down to the retail price of your mustard right there from all the way back here, too low, to go up to squeeze the shorts out in here to go up. And if I can't get above here, what happens to the longs? Hasta la vista, you get a coupon to the buffet. Now the market is short. What might happen if that's too low and yesterday's retail price is too low? Where's my buy stops? They are above yesterday's high, above this high, and we might at some point come back here or not. Now let's go just take a look at where we are today. What's this? Intermediate time frame. So what's that? Intermediate time frame. Too low yesterday. What's this? Too low today. Sorry, Charlie the tuna. Where's my fuel? There, over yesterday's high, and over here. And, from there, as they say la guerre. How we doing so far? Dan, where am I from originally? You can't hear my New York, Brooklyn accent? Hey, Doug, I thought you were resting. Okay, so this sets up our long. Now, nobody knows. Let's go back to what we know. We don't know. So let's not worry about the knowing thing. Let's see what we do know. ETH high, overnight volume point of control. Now let's talk about a couple things here. Let me get rid of this one moment. What we need to understand is the condition of the market. The market is short, right? So if the market is short, what does that tell us? There's buy stops above us. Part of the thrill is not knowing, of course, it's going to go up, is it going to go down, from where, from what? All that's, So we don't know, but we know this is the highest retail price. Now we're opening. Let's take a look at where we're going to open, if I can find it. I think it must be covered up. Guys, where's the RTH open? I don't want to keep flipping around here. RTH open. Can I get the RTH open? 40? Okay, it's covered up. All right, I'm sorry. Gee whiz. This is what happens when you're on a laptop. By the way, guys, if I drop out, be patient. I'm in Costa Rica, and the internet comes and goes, depends on the mood. But I will come back, as they say. It was like MacArthur in the Philippines. I will return. Just takes time. You guys probably don't know what that's about. Some of you do. Okay. So RTH open, what do I know? ETH high, overnight volume point of control, and there's a little more. So we're opening in range. This is the 25 level. the microcomposite volume point of control that I pointed out. Yesterday's value area high, which is debatable whether or not we actually had value, but hey, ETH mid, and the retail price from yesterday. So we're opening higher inside of yesterday's range. Now, there's something else you need to know. And I posted this in TraderLab, and it's not, these things are not overly material, but they're important, okay? Yesterday's low is here in the ETH. So let's take this. So we know what happened yesterday. So what did we do in the ETH? Yesterday's low. There's the ETH low. Why didn't we go lower? That's the first clue. Now, all it is clue. Now, remember, I am also clueless, but I'm not ignorant. 39.75. Okay, guys, thanks. 39. That's all right. Thank you. So this, first of all, tells me maybe that's too low. And again, no clue. Settlement is here. If the settlement is down here and we have what looks like trending up in the ETH, and the ETH volume point of control, the highest volume is here. Remember shopping. Is it possible this is too low? Now, there's another piece. If the market goes up in the ETH, and the ETH high is here, and the open is going to be right around here, what does that mean? Let's go back, because before this thing even starts, the RTH open is, I know now that the inventory in the ETH is long. So we know there's short covering going on in the ETH. So what that says is the shorts are getting squeezed, they're covering. It means also the possibility exists that today in the RTH that'll continue. So that's one piece. The other piece is that the inventory is almost 100% long from that trending configuration in the ETH. And what often happens is that we rebalance. So in other words, we're going to get potentially a counter rotation because the market is long. Now the market, so let's think of this from two sides. The market's short in the RTH, from the couple days coming down. Buy stops are in from the sellers are above us. We have longs in the squeeze that started in the ETH, and we also know that we tested yesterday's low in the ETH with buying, and we're above settlement. Two forces. The longs in the ETH might need to equalize, which means we'll counter rotate down and take some of them out. And then the shorts that are in the RTH can get squeezed. Now, how that manifests itself is part of the thrill of randomness. Is everybody with me so far? Now, before the thing opens, that is the lay of the land. Now, how do you trade that? Great question. And this is where structured trades come in. And there's many different ways to do this. I try to keep this very simple. Trading does not have to be complicated. And this is not a business of action. This is a business of patience. Because actual trades that really have good opportunity, there are not that many of them. There's a lot of rotations, but the risk is pretty equal. All trades have risk, but not all risk is created equal. Does that make sense? Because if risk is equal, does that mean opportunity is equal? It's not. So some trades, and I kind of think of them as primary opportunities. So I don't look to trade a lot. I bet a high volume trader in the past, too much brain damage, too much wear and tear, and eyeballs fall out of my head. I don't want to do that anymore. I mean, when I say anymore, this is like 25 years ago. So instead, I changed my time frame because I really look at this more like my risk is constant, pretty constant, no matter what trade I put on. Yours probably is also. And in the ES, let's say anywhere from 2.5 to 4 points, somewhere, depending on volatility. I'm just throwing a number out. Yours could be different. It's individual. But that's kind of where mine runs per contract. Now, and I know anytime I put a trade on, I'm taking that risk-ish, So if I'm taking more trades, I'm really taking more risk. But all trades are not equal. So the trades that have the best opportunity is when I'm anticipating the other side being trapped, because the sellers, if the market is short, the sellers become the buyers. So I want to align, if I can, against the other side. In other words, if they are short, I want to get long. And then other buyers will come in, and then the shorts become buyers also. Does that make sense? So I'm always thinking who's caught. So I built trading systems years ago that actually traded in the stops. So the concept started for me many years ago, and that was built off of my experience getting stopped out. I said, well, maybe I should turn this idea around and start thinking about why these guys get stopped. Why am I getting stopped out? And then it was, isolate this behavior. I can start building a system to use that behavior, because most of us developing traders are getting stopped out. Well, maybe there's something positive in that experience. So part of this, and it's very logical if you think about it, why does the market go up? If the market's short, where's the sellers? Well, the sellers become the buyers. Isn't this logical? RTH open. So this yellow line is called the developing volume point of control. We have over a 90% probability of taking either the ETH high or low. But remember, the inventory is lopsided from the ETH, so it's long, which means go down, maybe, go up. But how it does it, no clue. So 90% probability to go here, and you have to vet every statistic you hear anywhere or anything from anybody. Doesn't matter. Even the 60 PDFs of structured trades I've shared, you got to vet them. Okay? You guys know that. We're all adults here. Overnight volume point of control. If we're opening higher in range, and this is based on a stat sheet, and this is available to all you in TraderLab, again, you got to vet it. Getting to the overnight volume point of control, almost an 82% probability to go there. Why would we go there? Shopping. Can of mustard or bottle of mustard right here. This is the fair price in the ETH. ETH high or low? 90%. Okay? Actually higher. About 97% probability. Well, I don't know about you. I think this one's closer. And the settlement, remember, near the low of the day. Point of control, which is the highest volume. The price of mustard is way down below us. Maybe it's too low. So, and then what? Yesterday's high or low? Well, if we're all the way up here, and the ETH low was yesterday's low, and we have an, 82% probability to take out yesterday's high or low. What do you think? High or low? Well, all of this suggests to me short squeeze. Now, the problem, you see, is how, where, when, right? This is the dilemma for operating in randomness. So if we're operating in randomness, but I do know that, let's come back to what I know. Market is short in the RTH. Things have been going down. Everybody's having a great time. Buy stops above us. I run out of sellers. Hasta la vista. Shorts, I'll see you later. Send me a postcard. Next thing, ETH low is at yesterday's low. Too low. Okay? Yesterday's point of control, retail price for your mustard, is down near the low of the day. What does it mean? Too low. ETH, last auction, highest volume is right here. What might it mean? Too low. Got it? So everything says to me, short squeeze. Higher time frame. Problem? What are you going to do? Let's look. Now, what it says and what the market does, now we're in a different situation here. Now I'm going to get down into order flow, and I'm going to get down into using Bookmap, and I'm going to show you how to take stops, and I'm going to show you trades. And I'm keeping this at a rather fundamental level because you don't need anything more than this. The more complex you make this and the more you compress it, the more trades you're going to take, the more FOMO you're going to have, and the less anticipation. Trading is, there used to be a Heinz commercial, and they would show this ketchup coming out of the bottle, and they'd play this song, Anticipation. You got to anticipate to participate. None of this chasing the market around. You do that, that's just FOMO. You're on your way out, just hasn't hit you, and you know where. So, RTH open. Thanks for that. ETH high probability. This is the retail price. Starts right here. Is this too high or too low? This is your developing mustard price. Shopping. Too high. This yellow line is where the volume is, and it starts at 0 at RTH open. It's very sensitive. Why? There's no volume. It starts coming in, and these are shoppers. Trading is shopping. So let's go back to the premise. What are we doing here? We're trying to figure out what's too high, what's too low, what's fair, and it's going to move all over the place because the shoppers are trying to figure out what this thing is worth and its different time frames. And this is the microstructure. So this is what makes us crazy. Now, when you go to your store, it doesn't change. Very low, not much, right? Short time frame. Here, store, long time frame. So the shopping is happening here, but it's all over the place because this is micro. So, okay, so what do we know? Too high? I'm going to mark it. I call it a variable high volume node. Made it up. And all I'm tracking is pricing. You know, you guys ever kept track of a price on something? You know, what is this selling for? Well, that's too high. I'm not paying it. Now I leave the store. Think of it very simply. This is the new retail price. If it's too high, I'm going to go down. New retail price. Going lower. Watch. So I'm tracking this, and I'm going, going lower. Now, I don't have a trade. I'm sitting here with my jaw on the table. Don't know. What I know is I know that the shorts are vulnerable and that the market can go up and we can go up and just keep going and squeeze, or we can get a squeeze, new continuation selling, and I have this as my support. So I have to wait. Jesse Livermore, who some say might have been one of the greatest traders, had this thing, and I think it's always important to reflect on what traders say. There's certain truths about trading. One is patience. Most of us are driven by emotional states and FOMO, and we're going to be sell, buy, sell. You know, I have found that it costs me a lot. I don't do it. I try not to do it. I am human. I do make errors, but I don't make a lot of them. I mean, I've already paid enough for that education. So this has over a 90% probability to get here. It's not a long. We're in here 10 seconds. 10 seconds, four blinks of the eye, and it's already here. But now I'm monitoring for change. Right here, I get VPOC migration. Made it up. This is now the retail price. So what I'm seeing is, and this is micro, and these are not actionable unless you are way experienced, but this is a way to narrate the behavior. That's how I look at this. I'm saying is, well, that price now is too low. This price is too high. There's resistance. Too low. This shifts up. That price is too low. This is the current retail price. If it's, I can either go down, right? You know, so either too high. If I get below here, it's too low. If I pull back and this shifts up, now that's too low. Support, support. And this is all in hindsight. I can't do anything with this. Too fast. Resistance, don't forget, is there. Break above it. New retail price. What's the possibilities? Up, or you're going to love this, down. But why? If this price is too high, remember, our mustard, it's either too low, or if I break down, then maybe it becomes too high. It's a shopping experience. So let's just look what it does. Oh, still too low. Short squeeze, right? Okay. Watch. So in TraderLab, advanced methodology, and this is, I don't suggest this for anybody. This is called VPOC migration. It is an aggressive trade. You would, and this is, again, it's not one I would take, maybe. VPOC migration. Let's look at change in behavior. So if this right here, let me bring you back a second here. Too low, not actionable. Break high, you're over here. Opening swing high, right here. So opening swing high can be support. This is extremely aggressive trading. You'd have to know. If you don't know, you're just sitting here with your jaw on the desk. VPOC migration. This sets up a potential long. This is only for those who have vetted opening trades, opening swing trades, and understand opening swing methodology and the complete understanding of the condition of the market, which is it's short. This is what you need to know. It's not a trade for developing traders. This is like the last trade you want to put in your quiver. This is a continuation long. This is long. So support is here, there, migration, long, and then wherever. Now and this is not a long, I know I'm saying it's a long and it's not, because this is the most advanced trade that we have in TraderLab because of its speed, its location, and you don't have structure. That's what makes it really difficult. And if a trader can't do the other trades that I've shared, this will just take you out of business. It's too fast. Now, market's going up. Notice up, 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 up. Now there's a counter rotation. This is the first counter rotation. So now let's just look at this. I'm going to isolate it. Right here, up, buyers are here. You see the delta. Liquidity comes in here, no clue. The sellers get below the buyers right here. And look at this rotation. Now, right here, the antenna goes up. Why? Why? Because this is the first change in behavior, right? For this. VPOC migration. What does that say? Same thing it says here. Boom. So this here tells me there's a potential. This here might be too high. Right here is resistance. Right there. See it? VPOC migration. What I'm doing here is, this is more microstructure. This is the daily developing time frame. This shifts up, up. That shifts up, up. Until it changes. We are looking for a change in behavior. I got to label this, by the way. Got to remember. You know, if I forget to do these things, which is easy to do when I'm streaming because I'm not a good multitasker. Because if I'm speaking and showing, I'm not following my plan. My plan is I have to mark these because what is the purpose of the market? It's a shopping experience. What's too high, what's too low, you know? And we won't know that until hindsight. So we're not going to know. Well, here's what we know. We got this resting liquidity. That's been in the book. You don't see anything else laying around here, do you? And it's the highest liquidity as we're coming up. It's right here. Let's see if there's anything above it. There's nothing here. So we have this. Everybody who's using Bookmap or an order flow tool, or is just looking at the dome, which I never could look at the dome. I want to see it here because now I can concentrate where I need to be. So I've got my buyers here. There's my delta. But let's look at what's going on with the buyers right here. Let's just look. So I've got my aggressors here. Market's going up. And I'm going up on stops. Okay. But as I'm going higher, I'm getting less delta. Delta's aggressors. Okay. I come up here. Buyers are here, but less. Notice, so this is delta divergence. If you want to, think about divergence, delta's going down. So the price can go up, but I'm getting less positive delta. So that means even though price is going higher, and there's aggressors, the passive side is absorbing. Now you don't know, but you can start thinking about it. Notice this. So this is going down. This is your classic divergence, and this is going up. And I got this. So it's like, oh, that's nice. So let's look. Liquidity. So this is that resting liquidity. This is where order flow can come in. So let's look again. So here I'm seeing change. Now, notice how it changes. You're getting less buyers coming up here. Now you get your sellers, big seller, and now you're getting less sellers as we drop down. So you have buyers here. There's the icebergs. Then it rotates up. you get more buyers. And then where's my buyers? Now my sellers take over. So, but the key to this is the order flow and when it runs into this liquidity and now your icebergs. And again, it can keep going. We won't know until hindsight. So let's look at this. So I run into this and I'm looking for it to do what? Keep going. What does it do? It breaks the other way. Now we get our VPOC migration. Let's keep watching what's going on here. And what do we anticipate? Don't we anticipate either up or down? I know. You go, really? Up or down? Let me write that in my book. There's a tremendous insight. No, it's the behavior. So I know this might be too high. I have absorption here. That's why I have positive delta, but no movement. I ran into the liquidity. These are resting orders in a limit order book. That's why they're sitting over here in the dome. I have an iceberg here, and I see that, and I see stops. Why might we have stops? Because the icebergs need the liquidity to sell into. So buy stops are market orders, and they're passive. So passive and aggressors. That's how it takes place. Now, what's going to happen here? If I don't get more buyers absorbing the selling, then that could be it. Now I have to see what happens here. VPOC migration. So here's the possibilities. Up to test or down. Lovely. Watch. Up to test or down. VPOC migration. Uh-oh. What's that mean, Tom? Is it too high? Label it. So here, there's change, maybe. What's the change? Liquidity, absorption, seller. So here, seller, buyers are still battling. They run into this. Who knows? Sellers again. VPOC migration. Right here, it's either up or break. If it breaks, maybe now that's too high. Now, what do you do with this? Well, if you were long, there's a few things you can do. Now, remember, what is our, let's come back to our statistics. There's almost an 82% probability that we check the overnight volume point of control. There was over a 90% probability we take out the ETH high or low. And what do we know? There's short covering in the ETH. So what do we have here? Short squeeze, but now we have longs in the market. So if we have longs in the market, then it's possible that these longs get thrown under the bus, and then we have an 82% probability to come down. So subject to your plan, you either get taken out of your long on a trailing stop. Depending on your plan, you can fade this because of an 82% probability to come back to there. Let's see what it does. Now, let me show you this. So right here, we have a trade in TraderLab called VWAP to VPOC. Now, I understand that this might be too high, but I understand this might be too low. This is a price I rejected, too low. So my support is here. So this becomes what's called mean reversion long at the time, okay? Let's go back and look at it. So right here is a possibility for a reversion long continuation. So this one would be a stop. So if you had a long here, if it's in your plan, that's okay. If you didn't, this would be a reversion long. This would be a stop, okay? just the way it is. Once you get below it, then you're off. You're off the longs, because now we're breaking structure. And that's really here. Here. Anyway, this, no good. Now what? Now here. My data went out right here. Internet, Costa Rica. Now, I don't have this, but what it looked like to me at the time is we broke under the overnight volume point of control, and we came back to test from below. That set up a short scenario. I did not have a short coming down, okay? So this was the first short. And then let me show you where the target is. We were looking around 25, and the value area high is another one, which is this. Okay, value area high has a 72% probability. So I have 25, which I showed you at the top of the stream, and I have this. So the short was here and then to there, which could be done, or to there. And if we keep going, you know, you keep going. You don't know. And actually, look at that. We got here. No clue. VPOC migration. This suggests this is too high, and now the possibility to continue lower. So for me, it's shorts here, and you're going really for this. This was it. This is resistance. Now, when I was looking at this right here, I'm thinking, okay, it looks like the shorts are taking control back again, and I was looking for a short here. So what it was is, this is below me. This is now the retail price. This is an outside edge. And what I have here are multiple distributions or auctions. The dividing line is right here. That's called a low volume node. So if this is the retail price, I'm looking for a short to go from here to here. That's my next trade. So what happens is I'm looking at it, and all it does is it keeps going. Once I come through here, I don't have a trade. So I don't have any trade now. I'm going, what's going on? And that's really what I do. I go, well, it's not making sense to me. So once I'm through here, I don't have anything. So now I'm again back in the Barca Lounger because it is not fitting my plan. I'm just waiting now. VPOC migration. What does it say? Maybe too low. I'm going to label it. So I'm trying to do is stay in alignment. And when it was doing this, I was looking at this going, wow, it's not, you know, it's violating levels. If it violates a level, then I'm out. I just wait. I have to wait because it's not fitting my plan. Just me. Here's a potential short. Let me show you. Now, this is a little more advanced concept, guys. So it's not necessarily a trade, you know, for anybody. The thing to understand about the auction is it's a language. So I don't use the indicators like most do. Remember where this came from. We were going too low, too low, too low, too high. Resistance. Break away, too high. So I have too high, too high. I'm going to throw a line in here. And the reason it's important is this is pricing and not predictive. It's pricing. So I'm going to put one there. And I'm going to put one over here. because we rejected it. You notice here, I'm not paying that. I'm out of here. You sure? Yeah, I'm definitely not paying that. You can, and then we're gone. So now if I come back the other way, let's come back. When we return to what you guys think of support and resistance, I know. And here, too high. Well, this now is what? Well, if I only come out here, I can come back and revert. But if I blow through it, now I have to go back and look at what was too high. That's all I can tell you about it. So, VPOC migration. What are we looking for? First of all, too high, too high. VPOC migration, going to the moon or not. So what do we know? Too high, break low, new retail price. What's the possibilities? Up or break down, and this sets a short. And your target would be to go here. This thing is like a rocket, Now, so this is a short. Now, for me, again, this is the target because I'm trading the high volume, the pricing structure. In other words, I'm not paying that. Short, short, short. So this shows me the shorts. Then I have to use a trigger, and I can enter anywhere here. And then I'm only trying to go there. That's as far as I go with this thing. And I'm thinking at the time, maybe lower. Well, where do I come back? I come back over here. No clue. And this is now my new retail price. What am I thinking? Lower. What does it do? The opposite. Out of the trade and no long. So I can't get long now. Now it's running away from me. And I feel FOMO and I go, what's going on? Here's what's going on. Right here, the first hour's high comes in at 9:30 Central Time. When I see this kind of buying, for me, I want to get long. I don't have a location. But I do know I have a 98% probability of taking out the first hour's high or low. Okay? So I'm looking for the long. Now here's the long. Let me show you. So this kind of buying, it's like, oh boy. So now I have to get long. Let's watch. So my next trade is a long. What do I know? I know this is too high. And 9:30, I have the IB high. So I'm anticipating. This is an order flow trigger coming up right here. This is an outside edge of this distribution. I'm above my resistance, okay? And so here, how do I get along here? Well, I have order flow. These are order flow triggers. This is my variable high volume nodes. This is an outside edge. High volume is here. Order flow is here. And 9:30 Central Time here in Costa Rica, I have over 98% probability. What else do I have? Let's come back. What else do I have? I have yesterday's high. What's at yesterday's high? Stops. What's my probability of yesterday's high or low? 82%. Where am I going? Here. So I have to get long for the stats, and I need the way to get long, and I have a 98% probability to take this out. So I'm anticipating it's going to get taken out. I have to get long. Once I'm above all this, and now I'm using an order flow trigger, and it's a long. This is the outside edge. Here's the order flow. Here's the VHVNs. This is a little more advanced. Buyers are in control. The long is in here to go take out this and to go to yesterday's high. So that's the next trade here. There's the entry. outside edge, order flow here. So the entry would be, your stop has to go under here because this is the outside edge. This is the retail price in this distribution. And this has a high probability, 98%. And I'm trading into the probability because now the shorts are hosed. And I have yesterday's high with the high probability target. So this is the long to here. VPOC migration suggests higher. Now, I always say, now the thing about this is we don't know where it's going to go, what it's going to do. I tend to trade the targets or trailing stop. So this was the next target because there's buy stops above yesterday's high. Then the other part becomes, if we can get through here, we can come up to the stops above it or not. That part, no clue. But let's look a little further. As we come into these stops, we get a buy sweep. We're getting sweeps. Sweeps often suggest a counter rotation. The term often is important because nothing predicts anything here. See the sweeps, counter rotation. See the sweep, counter rotation. See the sweeps, counter rotation. Sweeps the other way suggest counter rotation. Sweep, counter rotation. Sweep, counter rotation. Sweep, counter rotation. So buy sweep, sell sweep. Down here, I don't see anything. Do you? Up here, sweep and stops. Then what? Counter rotation. Break low. Where was our outside edge? It's out here. Sweep. What do we anticipate? Counter rotation. What happens? Nada. Hasta la vista. I haven't seen any of this, so I don't know what's going on here. Wow. Did I miss something, guys? Was there news or something? This is a day that'll kick you back in your Barca lounger a few times. That's pretty amazing. Neutral day. Well, is that the best that we can do on a squeeze? That's kind of bearish. If all we can do is get the stops out at yesterday's high, that's kind of negative, guys. I'm only saying because we got the weak shorts out. If we get the weak shorts out, the market can go down. The market goes up to go down, goes down to go up. So you got to be very careful today, because if we accelerate down, then we can do something called a neutral extreme day. And this is the retail price from yesterday and yesterday's low. If we get under here, I would get my helmet out. You know, I really can't. When it comes to an opinion, I really don't have one. But I do have suspicions that we already had our, quote, Santa Claus rally. It was actually the turkey rally, the Thanksgiving rally. I think we've already done it, but that doesn't have anything to do with how I trade. And if the market does, so in other words, I trade a plan and I take my trades, or whatever it does, it does. And at that point, it's an alignment thing. So this was too low. Maybe now it's resistance. So what look at these distributions. So this is an outside edge out here. So we want to watch that for potential reversion back here. So if I come across, let me just make sure I've got this. So I'm going to watch this as a location to enjoy, and the outside edge for reversion back to it. Let's just see. These are not trade recommendations. These are just locations of, to observe. So this is the outside edge. Let me turn a few things on over if I can. I don't think I can. No. So let's watch. So this is variable high volume node. It was, so you notice how the volume point of control is up here. We have rejected it. So the possibility is, since all we did is get the stops out over yesterday's high, that we're done with the squeeze, and now the trend, if you think it might be down, is going to continue. So then if the trend is going to be down, maybe we have to start looking at outside edges for reversion trading, potentially short, for continuation, and possibly come out the bottom again and get what's called a neutral extreme day, which means a trend. We break down and get out yesterday's low, then we can go back into a trend. So we'll see. So we'll see what it does here. So there's nothing to do. So what we have here now is buy stops are in this leg, so we can counter rotate and we can get into this swing. Then out in here is where we're going to want to look for it to come back and mean revert. So it would be outside here and then possibly continue. We'll see. There's two trades here actually, and one is called the IBF, which is a reversion trade to come inside, which is a long out of here, which is not a trade I would take. And then, so for me, that would be counter trend, because for me, the market, the longs failed already. So anything this is counter rotation for me. Not other traders trade this, and that's fine. It's all a definition of time frame. So I don't have a long. The way I would look at this is cover a short. Depends how you want to use it. That's called the IBF. Then for me, if I think the trend might be down now because we already squeezed out the shorts and failed, now I'm looking for a short continuation trade. So there'd be no long for me. It'd be short. And I have to see. In the meantime, this could be a long or an exit. And it's only a long if you how you define trend. Is the trend up or is the trend down? In this time frame, it is up, but in this, it's down. That's where time frame comes into all this. So what I suggest for developing traders is you pick the dominant side and you use the counter trend or counter rotation for trade management, because you have to learn all those elements. Who's the dominant side? How do you manage a trade before you ever start taking counter trend trade? So let's just see what it does. Do we want to get short? Where would it be? Up in this area. What else is here? Well, full session VWAP, that's a lovely thing. But this is an outside area. Now, here's the thing you have to know. This is where you'd be trying to go. So the further out it goes and squeezes, and we have to look left, write that down. Where's our swings? We got here, so we got these guys coming out. And then where's our swings? Because the stops are going to be over the swings. So you cannot ignore this, and this. So the further outside I come, because I'm going to have equal risk, the more range I have to come back here. So this is where I'm going to try to come for reversion trading, if it happens. If it doesn't happen, there's nothing to do. So let's see. So, patience, wait. Sweep, so we want to watch. Outside edge is out in here. So we have to just wait. This is called the IBF. So again, counter trend trade. If you're in TraderLab and you have an edge with the dominant side, then the next place is to start trading the opposite side into the stops. Remember how the market works. Market goes up to go down. So if the market goes down, you got shorts. You can actually buy to ride the buy stops up. So I don't have anything now. It's moving past this outside edge. So now I don't have anything. I'm going to have to look a little further outside here. So I have nothing to do. So my trade did not show up. So there's two possibilities here. One is the IBF, which is, and again, it's not for a developing trader. It is, or outside to revert and come back here. So that the short is off the table. And depending on where you are in your business or in your plan, it's either a long here or nothing, or an exit. That's really what you got. So now we got to watch here. Kind of in the middle of traffic, you know, it's just not, this is not a place I would trade. So I just would stay away because I'm in this. If I'm in this, it's high volume and it can slow the market down, but it doesn't mean we're not going to come back up to this outside. So for me, I don't have anything to do. I try to do for developing traders and to help them get a sense of where the range might take place and to trade with what the perception of dominant side is. And we're in a two-sided scenario here. You guys have any questions? So for me, it's either counter trend long or no long. This thing is really all over the place today. Let's see what this looks like. So this is the fair price. So it looks like we may come back here. It's not a recommendation. Some pretty nice range in here. Greenhorn, could it be attributed to triple witching? I just think I wouldn't attribute it to that specifically. We have quite a fight going on here between the longs and the shorts. And we saw it earlier today where that range, we kept violating structure. So it's a really conflicted trade as far as the way I see it. You have to kind of cut out your trades in the sense of where they happen and just wait for them, you know. Here's the IB on the other side, you know. So it's really just going across these levels. So there's just a lot of, looks like when levels are not respected, it often means that there's higher time frame participants in here. This is, you know, if you're very adept at this, you can trade these rotations. But, when I'm doing the stream here, I'm always thinking about to become a profitable trader, it's not about flipping around. You've got to learn a couple of trades that you can execute consistently and extract an edge with. That's kind of what you need to do to be able to survive in the business. And then as you get a better understanding of market mechanics, you can start adding to it. But so I'm always trying to think about how can I help traders survive, you know? So I'm not thinking about trying to show you fancy, soft shoot, like trade this, you could have done this, you could have bought that, because that's not the real world for most traders. You got to be trading a long time to be able to operate in shorter time frames. So it's more about knowing where behavior might take place and then knowing that certain behavior gives you an edge, you know. So for example, the IBF here, that trade does have an edge in this volatility, but it's counter trend in this volatility. If you think the trend might be down in the higher time frame, I think the trend at the moment might be down. So which way do you trade it? Do you just take shorts for continuation, or do you take longs and shorts? If you're asking yourself what you should do, take one side. And if we think maybe the trend is down, then you use these squeezes for continuation shorts. That's what you would be doing. And you'd be doing it at locations if you have them mapped out. If you don't have a trade in between, then there's no trade. I mean, to get an idea of this, in the TraderLab, I've got streams up to 4.5 hours long. You could see me trade this stuff. But I found over the years that the fact that I can do this or trade a lot more actively is only from experience and having not been able to trade that way. You kind of have to build it from the ground up. If you try to run ahead of your development, you're going to put yourself out of business. That's FOMO. So you kind of have to start at a more fundamental, develop an understanding of market mechanics. And then as you develop this understanding, you're going to see the same behaviors show up in different time frames. That's this vertical integration of time, Matryoshka dolls, as I think of them. So, but you have to understand a broad stroke and be able to trade it. So that means less trades, but you're not here for a lot of trades. You're here to anticipate a trade and be prepared for it. Because otherwise you'll chase the market when the job is to anticipate the market. And if you don't have a trade somewhere, then there's just nothing to do. Your job is to sit and wait. This is the outside edge. This is the mean. This is an outside edge. When you come outside, you could look out here. Because this is where it's, I'm not paying that. This is the fair price. And this is down here. I'm not paying that. It's too low. So this can do this. It can do out here to here. And this is a nice range. This is called mean reversion. It is a specific trade that I always suggest to developing traders in TraderLab that they learn. Because this is most of the behavior you're going to see most of the time. Rotations. So when we're trading a rotation, we are looking at outside in trading. Alex, what is the outside edge? The outside edge is the shopping experience. It's in the auction. You get a price that's too high, the buying dries up. If you get a price that's too low, wherever it is, the selling is going to dry up. And then it's going to come back to retail. So what the market tends to do is operate like this. And then like down here, it's doing the same thing. If this is too low, then, and if we break away from it, then we can look for too high. And we can anticipate, now let's look. Before we get there, up here, we know this is here. That's the outside edge. And if I come down here, once I'm up there, this is the outside edge. If I get under here, I can come back to there because that was too low. That's the fair price. So it's like too high, too low, fair. If I come through here, then I can come to the high volume in here and the outside edge is up here. And I can keep going or not, but this was too high. So I have resistance, support, and in between this. So when you look at this, if I come outside, I already know this is too high. And it doesn't mean I won't keep going. That's not, trading doesn't solve that for us. But it does show me where it might come. And if I get a structure here and a trigger, I can sell it. And the idea would be to come there first for a scale and then to go for this down here. That's the trade. It's called mean reversion. So let's see what it does. Yeah, greenhorn bull, you know what's really rough about trading, I think, for everybody, is we see the rotations and we think somehow we should trade all the rotations. That's not really what the business is. It's really kind of just saying, well, before the market even opens, we know what we'll do, but we don't know what the market will do. So this is a reversion trade, and this is the primary trade that traders ought to learn in TraderLab. And like everything, we all take stops, so that's part of the joy. By the way, just to give you something else, The IBF is also a reversion trade, that long from down here. But you'll notice I'm not taking the longs. I'm only taking the shorts. So this can be a long, but if you're developing, I think you're better served by just concentrating on one side, because now you're not flipping around like a fish on a dock. You're going to do is you're going to cover on the IBF if you're short, and then you're going to look to put the short back out, which would be out here, for the short to come to there, or down here, can come here too. But this trade is just there to there. And then trade management. This is why I say pick a side. What is the dominant side? Well, it's a great question, but I suspect at the moment it's the short side. And why would I think that? Well, we only picked the fuel at yesterday's high. I call this a stop pick. If I can't get buyers above here, then who are the buyers? Those are the stops. If I don't get more buyers here, then who's on the hook? The longs. So if the longs are on the hook, they got taken out. Then if I come back in IBF, then the shorts are on the hook and I counter rotate. If I come up here, who's on the hook? Maybe the longs who took the long counter trend IBF. Then I take the short out there for rotation, maybe down here or there. So on the short trade, it's there and not a recommendation. And if I clear this, then here, that's this trade. And either, whatever it does, it does. That part doesn't matter. But that's the way you can learn to trade. And if your goal is to learn to trade, then it's structured trades and patience, and not to be concerned with anybody else does, because if you don't have the skill to do it, you're going to go out of business. So it's more about, I believe, the reason I created TraderLab is to help traders build sustainability. And then the thing about this is, once you can do primary trades that you've learned how to vet that have an edge, then you can add more and more and more. But if you go from the other side, I want more and more and more without being the trade one, you're out of business. So I've always kind of thought about it, my thought is, based on what everybody else I've observed over 47 years of doing this, is why do they fail? Because they all have FOMO and they all want more. But if you can't trade one, you won't trade any. So it's like a proof of concept. You come to TraderLab, it's really about understanding, let me build a business. What do I need to build a business? What is a process for building a business? How do I deal with this emotional aspect of this? How do I deal in uncertainty? Can I build out a statistical edge that makes it tangible so I'm not controlled by my fear and greed? How do I do that? Statistics. Can you touch your feelings? No, you react to them. What about statistics? Those are tangible. If I have a tangible statistic, it gives me the confidence to manage my fear. That's really how this works. So if you're interested in that, then use the link in the bottom of YouTube if you want to visit TraderLab. That's all I can say. Just be patient. Does that make some sense? Guys, I hope you're getting something out of this. This is TraderLab. No holy grail. If you find it, DM me, we'll talk. But in the meantime, we have to start from the ground up, develop an understanding of market mechanics, understand we're in a random environment, understand that we can't predict anything. We have to try to align based on a market understanding. When the market doesn't do what our plan suggests and there's change, we have to define what change is and then not continue trading but wait for the next development. If we don't have another trade, then we don't take it until we do. We just sit and wait. It's like waiting for buses. Hope you got a good ride today. I'll tell you, the market certainly gave us a ride today. If you're in TraderLab, you'd have a profitable day. The whole idea of this is to be here for tomorrow and to make profits if that opportunity presents itself. Start with the basics, start with the primary. It's not about your ego. It's about sustainability and being here for the next trade and being here tomorrow and tomorrow the day after. Please give a like if you're visiting in YouTube. Don't forget that there's a Black Friday special going on right now at Bookmap. If you're interested, go to bookmap.com. You can save some substantial amount of dollars. It ends on December 31st. Don't miss out. If you're interested in TraderLab, there's no cost for it. It's open to everyone. There's a link in the bottom of YouTube. You can access it. All you got to do is confirm your Discord username. You'll send you a little code, and in you come. Visit the TraderLab community. There's no cost for it, and you can potentially move your game forward. And if you're not a successful trader, but you're working hard, roll your sleeves up. There's still more work to do, but there's also opportunity for you to create sustainability. But of course, nobody can guarantee it, but if you know how to shop, you already have the fundamentals of trading. You just need to understand market mechanics, how it works, why it does what it does, and only engage when you have an edge that favors you. Thanks again, guys. Don't forget to like. Look forward to seeing you soon.